Good morning, everyone. Hope you're well. Hope you're doing all right. So I've recently received a question, and the question was the following. If I were to start over at $0 per month, what would be the systems and processes that I would use in order to limit the amount of time that it would take me to get to $10,000 per month traded? I thought about it and I came up with these 5 wonderful systems that would reduce time wasters tremendously. And therefore, the first system is the system that we're going to speak about today in this episode is verification systems. Second system is emotion-free systems. Third one is dumb trading. Everything will be clear when we get there. Fourth one is forecasting systems. I believe this is going to be a game changer for you guys. And then fifth one is backtesting versus live trading. Talk about it more when we get there. So for today, we're going to focus on verification systems. Let's start by speaking about verification systems. Now guys, before we get right into it, I want to throw in a quick scam alert. Guys, I will never DM you first. I will never message you first. I will never friend request you. I will never suddenly start speaking to you about Bitcoin, DMing you and all that. The only way to get mentored by me, the only way to get chosen as one of the 5 students that I mentor is through the link in the description. That's it. Nothing else. I will never DM you. Don't get scammed. Now, let's get right into it. Verification systems, what are they? Why do we need them? Now guys, any thought that you have right now, so any decision that you have right now, or any thought that you have right now, your brain pushes it into some sort of a verification system in order to verify whether that thought, whether that decision is a good decision, a good thought, or a bad decision. Okay, that's what happens in your subconscious mind. For example, you're sitting at work at your job and you're just doing your job correctly, and then your brain is like, you know what? I really feel like going home right now. I really don't want to be here. Now, what your brain then does, it pushes that decision, that thought into a verification system, and then that verification system determines that, you know what, that's actually a bad decision. I cannot just get up and leave my work and go home. I'll be fired. And therefore, that's a bad decision to do. Let's not do it. And your brain stops you from doing it as a result of that verification system. Now, if that verification system right there was fucked, let's say, and it was wrong, then you will get that thought. You'll be like, I really want to go home. And then your brain will be like, you know what? That's actually a great idea. Let's do this. That's a great decision. And you'll get up and you'll leave. And as a result, you will lose your job. You will lose your income. So that verification system right there is responsible of the output that we receive in life. You can either make good decisions and get closer and closer to your goals and closer to your success a lot quicker, or you can take bad decisions which will set you back as a result. So we're all relying on that judgment process, on that verification process in our brain. Let's say I'm trading right now, okay? And I'm about to take a trade right here. This is my entry. And I have 2 stop loss areas in my head. I'm like, okay, I can either place my stop loss right here, or I can place my stop loss right there. Like right now, I'm debating with myself. My brain pushes those 2 decisions right there, this confusion, into its verification process. Now, let's say the verification process in my brain is like, okay, stop losses need to be tight because we need to cut our losses short. So we need to cut our losses short. As a result, the output of that decision would be like, you know what? Decision number 1 is a good decision. And decision number 2 is a bad decision. And therefore, we end up choosing decision number 1. Now, let's say that as a result of that, we end up losing and then the market pushes in our direction. That means that the way our brain evaluated this thing right here and determined that we need to have a tight stop loss, this verification process is fucked. I'm losing because my brain keeps making the wrong decisions or keeps misjudging the wrong decision as the good decision and the right decision as the bad decision. This is what's happening to the majority of traders. So how do I build a verification process that would have told me that having stop loss number 2, which was the better decision right here, that stop loss number 2 is the good decision and stop loss number 1 is the bad decision? So how do I build a machine in my head that would just look at information and make the right choices so I get closer to my goals as fast as I possibly can without wasting my time taking these bad decisions right there and losing as a result, thus pushing me away from my goal. Those are the decisions that I'm going to help you make and verify in this video. We're going to talk about how to find the right trading system, how to build a brain that can find the right trading system in the right ways. How do we find the right risk management? I just gave you an example, for example, the SLs, how to choose the right one, how to build a machine in your head that would choose the right SL and the right TP as opposed to fuck them up. How would we choose the number of instruments that we are trading? And in that point right here, I will reveal some of my trading edge, and therefore that would be a very great point to speak about right here, a very informative point. And then number 4, we're going to speak about how to verify the amount of risk that you should take per trade. Let's get right into it. How do you find the right trading system? Now, if I ask the average trader, how do you find your holy grail? How do you find your $1 million trading system? They're like, I just have to hustle for it. I have to try out as many different trading systems as I can find until I land on the right one. So I just have to spend time in this industry and be consistent and find a system, and then that system fails, and then I find another system, and then that other system fails, and then find a third system, and then try out those systems until I land on the right one, and finally I've made it. You're fucked. Here's the thing. If you think that you will find your profitable trading system through trial and error, which means that when I ask you, how do you find the right trading system? You're like, trial and error. And then your brain pushes that decision into a verification system and decides, oh, that's a good decision. You're fucked, because that's actually a bad decision. That's the worst way to go on about it. Let me give you a small example. I want to tell you a small story right now. Now, I execute my trades, guys, on the 30 minutes time frame. Okay, so I check the bias, I check where the market is going, where I believe it is going to go, and then I execute my trades on the 30 minutes time frame. Recently, I've lost a few trades, and then I scaled up to the daily time frame, and I found that the majority of my losses had 5 bullish candlesticks. 1, 2, 3, 4. 5 bullish candlesticks on the daily time frame. And therefore, when I scaled in to the 30 minutes time frame and tried to find, let's say, whatever, a buy through to the upside, right here, let's say, entry SL, and I want to enter through to the upside, I would lose that trade the majority of the times. And therefore, what I noticed is that, and bear with me here, I noticed that when there's 5 bullish candlesticks in a row, and I take a trade, I take a buy on the lower time frames, on the 30 minutes time frame, I will end up losing the majority of the times. I started avoiding setups, so whenever I saw 5 bullish daily candlesticks in a row, I started avoiding those buy setups, and therefore I saved some losses, I missed out, I avoided some losses, thus making me more profitable. So in other words, if we want to conclude right here, I'll say I just became more profitable by figuring out when does my system suck. So when does it suck? That's it. By figuring out that my system sucks when there is 5 bullish candlesticks in a row on the daily time frame, I became more profitable. Profitability is not found by going on a treasure hunt. Profitability is found in the answer to that question. When does my trading system suck? By figuring out the market conditions that make your system suck, that make your setup not work anymore. That's how you find profitability. I have turned many traders profitable by just simply telling them 2 pieces of information. The first piece is, this is my trading system. The second piece is, this is where my trading system suck. So avoid it there. That's it. Therefore, guys, you need to learn the market conditions in which your system hates, and then you need to avoid it so your system sucks less. So instead of searching the internet for systems, search within your system for flaws. That's how you achieve profitability, with familiarity, not with trial and error. To summarize the first point, guys, you're wasting a lot of time. If you want to get to $10,000 as soon as possible, you're wasting a lot of time doing trial and error. You know support and resistance, you know trend lines, you know Fibonacci, you know SMC, you know ICT, you know every strategy in the book, yet you're not profitable. You're wasting your time going on a treasure hunt. What you need to do instead is you need to pick one, learn when it sucks, and as you learn when it sucks, you can achieve profitability a lot faster, not when you just jump from one thing to the other. Stop wasting your time. The second reason your brain is fucked is because it judges every single thought that you have as a good decision. It tries to rationalize it. So whatever idea you have right now, your brain is like, yeah, that's a good idea because of X, Y, and Z. You always have a justification for the things that you're doing. Now let me explain this through risk management. This is our second point, risk management. Now let's say you're taking a trade right now, that's your entry. And I offer you a choice. I tell you, hey, you can either place your TP right here or right there. On the opposite side, you can either place your SL right here or right there. So what do you choose? Now, whatever you feel in the moment, if you feel like placing your TP right here at 2, your brain looks at that decision and says, you know what, I'm totally correct. I need to let my winners run. So let your winners run. That's the verification process that your brain would use if you were to choose 2. Your brain would be like, okay, yes, I'm correct. I need to place it here because I need to let my winners run. Now, if you choose this TP right here, your brain is like, yes, I'm totally correct because I need to not be greedy. So don't be greedy. Take profits. Now, on the other hand, it's the same shit. If you choose a bigger SL, so if you choose number 2, you're like, I'm totally correct because at the end of the day, I need to let the market breathe. If you choose the tighter stop loss, you're like, I'm totally correct because I need to cut my losses short. So what your brain does, and this is a big mistake, the strategy that your brain is using is that you choose the action. So whatever it is that you want to do, you're like, okay, maybe I'd like to do 1 right now. And then it rationalizes that action by allocating a logic to it. And that's why your verification system is fucked when it comes to risk management, because you can just do whatever. Take partials. If you take partials, you say, I'm taking some profits off the table and therefore I'm doing great. If you don't take partials, you're like, okay, I'm allowing myself bigger rewards. I'm letting my winners run and therefore that's totally fine. So whatever action you choose to do, your brain finds a justification for it and allocates that justification to your action so you never feel like you're doing something bad. And of course, that is wrong because in your definition of things, all actions are good. So there is nothing that you will decide here that your brain will be like, okay, that is bad. Nothing. Whatever decision you take, your brain will be like, okay, that's a good decision. It will find a logic, it will find a verification process to allocate for that logic and then say, okay, you know what? That's a good decision. No matter what you do, all actions are good. And of course, that is a logic fail because not all actions are equal and not all actions are good. How do I stop my brain from doing this? How do I stop my brain from justifying just about any action that I take and just making it seem good? Like whatever I do, it's good. How do I stop my brain from falling into this trap and allocating logic to whatever I choose to do? Now, the problem that is happening is that you try to justify your action with the English language, with words, with logic. So you try to find, my pen is dying, but you try to find a logic to whatever action that you do. That's how you justify your decisions. So you find logic, you rely on the English language to articulate a logic. That's the problem. Instead of relying on articulation and the English language or whatever language you use, you need to rely on numbers instead. Let me change the pen, but you need to rely on numbers. I don't rely on the English language to justify my trading decisions. I rely on numbers. For example, let's say I'm put in the same situation that you're put in right now. I have an entry, I can choose multiple TPs for it, I can choose multiple SLs for it, and I have that choice to make. Now, you rely on logic, you use English words. Okay, I need to let my winners run. I need to not be greedy and take profits. So you're using articulation. Now, what I would use is I would go to these TPs and these SLs, and I would look at my tested data. And I would be like, over a batch of 100 trades, I've tested placing my TP at number 1, and it has resulted in a P&L of 6% profits per 100 trades. Now, when I tested TP being placed at 2 over a batch of 100 trades, it gave me a P&L of, let's say, 8%. Now, when I tested that SL right here over a batch of 100 trades, it gave me a profitable P&L, let's say, of 4%. Now, when I tested that stop loss right there, it gave me a P&L of 7%. So, through numbers right here, I can be like, okay, do you want to choose this TP or this TP right there? Higher number right here. I am not using words. Fuck words. Fuck the language. Don't articulate your actions. You're not a lawyer. You're not trying to convince anyone that you made the right choice. And therefore, just rely on numbers. That's it. Okay, a higher number right here means that is my right choice. I don't need to think about it, and therefore not every decision that I think about is a good decision. If I put those two in my verification process that relies on number, it will judge this one as the good decision, so as the good decision, and it will judge this one as the bad decision. That's it. And therefore, again, that's the bad decision and that's the good decision. Because why? I'm relying on numbers. Now, how do you generate those numbers? That's the great thing. That will get you to $10,000 per month as quickly as possible. Whatever idea you have in mind. You have in mind right now, I'll tell you, for example, in November of 2024, okay, last year, the last quarter almost, so the last 3 months of the year, I had this idea. I saw Bitcoin because there was elections, and I took some trades, and those trades, because of the election, there was a lot of volume behind them, and therefore almost every profitable trade that I took just ran very much in my direction. So my TP is usually on average around 1 to 3 risk to reward ratio, and therefore the majority of my profitable trades just went above 1 to 3, 1 to 5, 1 to 6, 1 to 10 for some trades. Bitcoin, I remember it went up to $60,000 is where I closed it, and then it continued all the way up to $100,000. Could have made so much money, and therefore my TP was just getting smashed through all these trades during November. Now I was like, okay, would it be a better decision that instead of placing my TP at 1 to 3 risk to reward ratio, that I would start placing it at 1 to 5 so I can get some more wins, because the majority of my trades, as I can see in the moment right now, are pushing further than 1 to 3, further than 1 to 5, further than 1 to 6. And then I went ahead for that quarter, I went to my trades and I just tested 2 TP levels and I recorded the result. What would it be? So for example, for a trade that just ran to my 1 to 3 risk to reward ratio and then came back to my SL, if I would have placed a TP at right there at 1 to 5, that trade would become a loss. And for a trade that just smashed through my TP, that would be a more profitable trade if I just increase my TP. So I already had the results for this one, because that is my average, my original TP that I used for those trades. So all I did is I tested another one. I was like, okay, if my TP would have been at 1 to 5, what would happen to that trade? For some trades, they turned into losses. And for some other trades, they turned into bigger wins. So I previously had 1 to 3 risk to reward ratio. Now I have 1 to 5. So I gained an additional of 2R per winning trade. Now I added them up. I was like, okay, the trades that turn into losses plus the trades that basically give me more money. And I saw that the result would actually be negative. I wouldn't be more profitable if I just increased my TP size. And therefore, fuck this. Let your winners run. Just didn't work for me. I tested it and I realized that some trades would turn into losses, some trades would turn into more profitable trades, and if I add everything together, it wouldn't be a better result. It would be a worse result than my 1-to-3 risk-reward ratio. What does that mean? That means that my trading system performs best at an average of 1-to-3 risk-to-reward ratio take profit. If I place my TP at 1-to-5 or 1-to-6 and let my winner run, as some might advise, it performs worse. If I place it at 1-to-1 also as well and not be greedy, as some others might advise, it would also perform worse. That means that there's a specific risk management methodology that pairs very well with your trading system. And if you just use that risk management with your trading system, you just turn it a lot more profitable. And therefore, if you want to waste less time, stop listening to general advice and just find that risk management that pairs very well with your trading system that would make it the most profitable. For me, that's an average of a TP at 1-to-3 risk-to-reward ratio. For you, it might be something else. So find the right risk management that pairs very well with your trading system. There's this general advice that a good decision is to choose one instrument to trade and then focus on it and then get very familiar with it. And then that's how you reach profitability on that specific instrument. Now guys, you can do whatever the fuck you want, but that is not what I did, and this is not how I achieved my profitability. I found my edge, my trading edge, through comparison. That's how I did it. Now, let me explain what that means. I look at the charts right now. I find 3 to 6 valid trading setups right now existing on the charts right now. And then I choose the best 1 or 2 trading setups to take. So I compare 3 to 6 valid trading setups right now existent on the charts. And as a result of that comparison, I end up choosing the best 1 or 2. And therefore I choose a number of instruments that would allow me to find 3 to 6 valid trading setups at a time. So if I look at the charts right now and I have 3 instruments, let's say, and on those 3 instruments, I can only find 1 trade. Then as I said, I need between 3 and 6. So let's say I need 4. Then I would choose a watch list that would be 12 instruments. Because if on 3 instruments I can find a trade, then on 12 instruments, I might be capable of finding 4 trades. So I add the number of instruments to a number that could generate me a multitude of trades, so I can compare them together and choose the best 1 or 2 trades for the day to take. So that's how I found my edge. I found my edge through comparison, not through focusing on one instrument. Now, the reason why I believe that was highly effective for me is for a multitude of reasons. The first reason is that choosing the best trades means that I'm always on the high quality trading side. So I'm always choosing the highest quality trades, which of course increase my profitability as a result. Number 2, I never emotionally convince myself to take a bad trade. Because if you have 3, 4, 5 trades right now available on the charts, and you're picking and choosing like a boss, I want this one, I don't want this one, why would you choose the bad trade? You have 5 choices, you will choose the best one, or 4 choices, 3 choices, whatever it is, you will choose the best out of those 3. So I will never emotionally convince myself to take a bad trade because of a lack of option, because I realized that that was my emotional problem at some point. So for example, I'll wake up at Monday, I will find no trades. I will wake up on Tuesday, I will find no trades. Then on Wednesday, I will look at the charts, and let's say I only see 1 valid trading setup. And I'm already frustrated. It's been 2, 3, 4 days, let's say, that I haven't, maybe 1 week that I haven't found any trades. So when that next week comes in and I'm looking at that 1 trade that is available on the charts, I convince myself to take it. And therefore I end up choosing a lower quality trade just because of a lack of option. And I don't want to choose my trades because of a lack of option. I want to choose my trade because it's my choice. I believe if you follow my comparison edge, then first of all, you're always on the high quality trading side, which makes you a lot faster to get to $10,000 per month. Now, the second thing is that you'll never emotionally convince yourself to take a bad trade, which also will help you avoid some emotional problems, thus getting you to $10,000 per month a lot quicker. Number three, which is also very important, if you're finding 3 to 4 valid trading setups per day and then you're taking 1 or 2, it means you're looking at a lot of data, you're accumulating a lot of data. Every day there's like 3, 4, 5 things to look at, and therefore you will get familiar with your trading system a lot quicker, get to know when your trading system sucks a lot quicker, so you can start avoiding those market conditions, thus refining and optimizing your trading system, and therefore, which will also help you, if you refine it quicker, it will help you to get to $10,000 per month a lot quicker as well. And that's why I prefer trading a bunch of instruments over trading only one instrument and focusing on it. So finally, let's talk about risk. There's 2 verification processes that your brain uses to determine whether the risk that you're being presented with is acceptable or not. So let's say right now I tell you, hey, take this trade and take a $1,000 risk, okay, for that trade. Now, the risk is $1,000. Your brain pushes it into a verification process and needs to decide whether that is a good decision or a bad decision to do. Now, one verification process is risk for reward, which I believe is a very fucking bad verification system. So what your brain does is it calculates the reward that it's seeking. For example, I'm seeking a $3,000 profit per day. And therefore, if I take a $1,000 risk and I get a 1 to 3 risk to reward ratio trade, then I get my $3,000 per day. Okay, that's good enough, which means that's a good enough risk. That's a good decision. Now, the reason why that is not a good decision is because let's say you decide to take $1,000 risk right now for your trade. However, your trading capital is $10,000, which means you are risking 10% of your trading capital for that trade just to get your reward of $3,000 per day. Now, the thing is, you can easily get in a losing streak, and there is no trading system. I know I say this a lot and it's very evident at this point, but there is no trading system that is free from losing streaks. So eventually you will get into a losing streak. So let's say you get into a losing streak of 10 trades in a row, okay? Boom, your whole $10,000 capital is gone and you don't get to trade tomorrow anymore. Done. Your trading career done. You don't get to trade tomorrow anymore because you blew your money and now you have to work again, accumulate some capital so you can trade again. So you just prohibited yourself the opportunity of trading because you took that specific risk, and therefore eventually you got burned. And therefore that is the way that you need to think about the burning part. So how do we think in the second term here? What I did is I went to my trading system and I just backtested it tremendously for years worth of data. And I measured, I spoke about it in the previous video, what would be my biggest losing streak. Okay, my biggest losing streak, let's say, was 8 trades in a row. Now, guess what, guys? For me, my risk to get burned is, let's say, if I'm down 8% or 10% on my account, any prop firm that you're working with will pull out their money, and any investor that you're working with will pull out their money. And therefore, my risk to get burned is if I get into a 10% drawdown, I will get burned. My investors will take their money, prop firms will take their money, I will be left with nothing to trade with. And therefore, I should never get to 10% in drawdown. Now, if my biggest losing streak ever is 8 trades in a row, then of course, risking 1% per trade, which would get me 8% in my worst case scenario, in my biggest losing streak, and this will be dangerous. 8% is very close to 10%. Also, investors can pull out and prop firms, mistakes can happen. Now, therefore, I choose a risk of 0.5%. Why? Because then my biggest losing streak will become if I'm taking 8 trades in a row, it will become 4% maximum. Now, 4% is an acceptable drawdown, so my worst case scenario would become an acceptable drawdown that investors will accept and that prop firms will accept. So you don't decide your risk based on the reward that you're seeking, especially if you want to get to a certain financial number. I know the thoughts that people might have. Okay, to get to 10,000, I need this much money per day and ta ta ta. No, you don't do that. That ends up wasting your time because you end up burning yourself, losing your capital, and then having to reset again. You go work, you accumulate another capital, ta ta ta, and therefore that ends up wasting a lot of time. Now, since this keeps you in the game, then at least you get a chance towards getting to $10,000 per month. In the first scenario right here, you get kicked out of the game. You get eliminated. You're not participating in this market anymore. You get burned and you get eliminated, and now you have to reset and you end up wasting a lot of time. But right here, even though this, if you look at the numbers, you're like, okay, I will not get much profits and all that, but at least this keeps you in the game and gives you a chance to get there. And at the end of the day, you don't achieve these numbers right here by flipping your $1,000 to $10,000 and taking massive risk for reward. You don't do that. You get there by becoming profitable and then accumulating capital to the point where even a little bit of risk can get you this $10,000 per month. So that's it. It's by accumulating capital, not by accumulating flips and rewards and all that. And in today's age, you can easily accumulate capital either through prop firms or if you're patient enough and you build a positive track record, you can get investors and all that. And therefore, there's many ways to get capital. But anyway, the road to $10,000 per month is not I flip $1,000 to $10,000. It's I take a small risk and I increase my capital enough where that small risk is enough to provide me with the reward that I want. This is the way that you need to decide it. That's it for today's video, guys. I hope you enjoyed it. Let me know in the comments below. And if you'd like to see more informative videos like this one, feel free to subscribe to this channel so you see the next videos. I'll talk to you guys soon.